Good morning, everyone. Let's take a look to this trading idea. We start the first one with Farm Fresh. So Farm Fresh is our technical buy on 12th January. Earlier, the stock has gained about 5.5% to peak at 1.49 cent, but missed out our first target at 1.53 cent. However, the subsequent consolidation saw the stock is pretty much forming something that we call a bull flag. And we retain the ongoing uptrend. But it's one of the reasons because the stock is pretty much trading above the 200-day moving average and continue to retain the current uptrend structure. So we open the the bull flag is actually about to end it, following improvement in terms of the trading volume and overall momentum. We expect a breakout soon, which is actually going to kickstart a new upcycle for the stock. Given the level where we think is quite attractive in terms of risk to ratio, we actually reiterate our buy with unchanged target. However, we actually move our stop loss slightly higher to 1.32. So in terms of risk to reward ratio now is 1 to 3.6 with 5.7% downside risk and 20% upside potential. Quant score is 4.2 using momentum style. Next technical resistance is similar at 1.53 cent and 1.69 cent. That's the first one. The second will be Eversen corporation. So one of the reasons why we highlight the stock because we like how the stock is building up new baseline on the double bottom pattern right within at 14 cent region. So the recovery recently has shown the stock has created some sort of the stronger baseline, and this double bottom pattern has been validated following a breakout move on the 29th of February. So the gap up was being confirmed by another 1 to 3 pattern, while yesterday gain on the back of a higher trading volume indicate that the ongoing uptrend set to accelerate further. So because of that, we put our technical resistance at 24 cent and 28.5 cent, while the cut loss will be below 18 cent. Risk to ratio, while the downside risk a bit large at 12.2, but the upside potential also equally attractive at 39%. Right, so last but not least will be JCY. So what makes JCY interesting is how the stock is actually built a back-to-back box pattern. So this box pattern saw the first box we saw the stock ranging from 90.5 cent and 25 cent in the period between November all the way until mid-January, and we saw another smaller box was formed. This is between mid-January up until yesterday. So this box tell you that the stock is pretty much in the phase of consolidation. But what we like the movement is the reaction or the trend, which pretty much consistent, remain on the uptrend. The stock continuing to bounce off the 200-day moving average, while you saw the recent rebound only occur at 50-day moving average. So the difference in terms of the what we call that moving average line is also has been widening. That actually indication that the uptrend is actually about to accelerate further. So backed by higher trading momentum yesterday, improving momentum as well, positive reading in both KLCI and MACD, we're expecting the uptrend to continue with the next technical resistance expected at 29 cent and 32.5 cent, while the cut loss will be below 22.5 cent. So risk to ratio is quite attractive with 1 to 3 with 10% downside risk and 30% upside potential.
Do 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 do.